All right. Well, thank you everybody for joining us today. My name is Jay Huang. I am a senior associate at Scott Legal PC. And today we're going to spend some time to discuss the E-2 visa requirements and considerations for the renewal of the E-2 visa. So just a few things before we get started. Some of you may know that the firm Scott Legal was actually founded on an E-2 visa over 10 years ago, and the founder of the firm actually applied for an E-2 visa to come to the United States to establish Scott Legal. And the firm has successfully renewed its E-2 visa as well. So this definitely gives us very deep familiarity and expertise with E-2 visas, and we have processed a high number of them. Scott Legal is a full service immigration firm, but we focus primarily on E-2 visas. We have processed hundreds and hundreds of E-2 visas, and we process many E-2 visas that are typically considered higher risk, which often means with lower investment amounts. We have processed the E-2 visas at consulates around the world, and our primary two consulates are Toronto and London. We will be continuing this webinar series, and we are doing at least 2 webinars a week on different immigration law related topics. And at the end of this webinar, we will be sending out a few things for the benefit of all participants. So first, we will send you a copy of the PowerPoint that will be used in this webinar. We will also send you a comprehensive guide to the E-2 visa that you can use as a resource. We will also send you a link that you can follow to sign up for any additional webinars that are coming up in the future, and also a link to this webinar as it will be recorded. This webinar will also be made available on YouTube, and we do encourage you to subscribe to our YouTube channel and hit the notification button as we do regularly upload a variety of immigration law related videos. Finally, we will send you a link that you can follow to set up a consultation with one of our experienced attorneys should you wish to discuss your case in further detail. As for today's panelists, we are lucky to have Michaela Vrazdova-Romeser, who is a senior attorney at the firm who has leading expertise on processing a wide variety of E-2 visa cases. Finally, for any question you may have, please feel free to add them to the chat box or use the Q&A function, and we will try and get to all questions. So without further delay, I will go ahead and start the presentation. All right, so let's do a little bit of an overview of the E-2 visa requirements. So as many of you know, the E-2 visa is a non-immigrant visa for investors, entrepreneurs who are seeking to come to the United States to develop and direct a U.S. enterprise that they invested in. And the E-2 visa won't necessarily directly lead to a green card, but you can continue extending your E-2 visa indefinitely as long as the applicant and their enterprise continue to meet the E-2 requirements. And there are two options on how you can obtain this E-2 visa. You can either purchase an existing business in the United States, or the applicant can start up a new enterprise in the US. So what are the requirements for the E-2 visa? The first requirement is that the applicant must be a national of a treaty country. And what does treaty country mean? So there is a list of countries that have signed an economic, cooperation treaty with the United States, and you can Google the list of the treaty countries by Googling treaty country Department of State, something like that, and you will be able to see that there is a wide variety of countries in all continents that have indeed signed this treaty with the United States. So the requirement is that you must be a national of one of those treaty countries where the E-2 visa is available. Many different countries are part of this group of treaty countries. Some examples of countries that are not part of the treaty arrangement is Russia, China, and India. If you're a national of those countries, the E-2 visa would not be applicable to you. Now, it is interesting to note that when we say a national of a treaty country, we are not referring to the country of birth, but we are referring to the country where you have a passport. So let's say you are a dual national of, two different countries, and one of them is a treaty country and one of them is not a treaty country. You can still use your nationality with the treaty country to qualify for the E-2 visa. So it is important to note that being a national here means, you have a passport of that treaty country. The other requirement is that the E-2 company, the enterprise in the United States where you're investing, it must be at least 50% owned by nationals of the treaty country. And this goes to the requirement of nationality of the enterprise, because nationality of the enterprise is defined by, the nationality of the people who own majority of the enterprise. When you apply as a principal treaty investor for the E-2 visa, you should ensure that you have at least 50% ownership over the enterprise. Develop and direct. So the other requirement for the E-2 visa is that the applicant, the principal investor applicant, is coming to the United States to develop and direct the enterprise. And the 50% ownership also goes to proving that control, because if you have majority ownership over the enterprise, that means that you do have, controlling ownership over the company. So that's proven through ownership. Now, the other requirement, the major requirement for the E-2 visa is that the applicant must have made a substantial investment into the enterprise. And what does substantial investment mean? So the first thing to note is that when you say investment, it means funds placed at risk. So one question that we frequently get from potential applicants is that what happens if you set up your LLC and then you simply transfer funds in your personal account to the business bank account, and the funds are just sitting there in the business bank account? Is that sufficient to count as investment when you're setting up a new company? And the answer to that is actually no, because when you just simply transfer money and then the money is, sitting in the business bank account of a company that you own, really practically you can take out the money at any time. So the government is not going to be willing to see only, that this transfer as evidence of funds placed at risk. So what does it mean to, place money at risk in the startup context when you actually spend money, related to expenditures setting up the business, such that you make those payments, and they're, actually you're committing money through things like signing up for a business lease and paying, rent, things like that, or actually purchasing equipment that you're going to use in your business. If you're setting up a business office, you're, purchasing furniture or things like that. And, spending on marketing, for example, spending on professional services to set up payroll, and all of these concrete expenditures that you make towards setting up the business is going to be considered funds placed at risk, because you've actually spent the money on concrete things. So that is very important to consider when you're doing the investment. Now, what if you are purchasing a business? So when you're purchasing a business, funds being placed at risk is either that you've already transferred the purchase funds to the seller, or the other option you can use in the purchase context is if you and the seller agree to put the purchase price into an escrow, a third-party escrow account, with the sole condition that whenever the E-2 visa is approved, the funds will be released to the seller. And it is important to make sure that that is the only condition for the escrow to be released. But that is definitely another option where you can put the money in the escrow, but as long as the sole condition is the E-2 visa approval, it will still be funds placed at risk, because there is really no other condition for the sale to go forward. Now, the other thing to note is that the government is asking for a substantial investment. So what does substantial mean? And that really goes to the amount of the investment. And we will go in further detail about that in the next slide. The source of funds. The source of funds is also a very important element to qualify, the government requires that the source be a legitimate source. Now, it can be any legitimate source, such as, if you are employed and you received, salary from your previous employer and those funds, accumulated in your bank account, that can be one legitimate source. It can also consist of funds gifted to you or loaned to you by someone for example. Now, when it is a loan or a gift, certain things to to note importantly, that if it is a gift from someone, for example, you need to go one step further and also provide evidence to the government where the person who gifted you the money earned the funds from. So, for example, if you received gifts from, your brother, you can provide evidence of where your brother earned the money from by things like your brother's income tax returns or things like that, showing that your brother earned the money with a legitimate source and then gifted the money to you. Now, in terms of loans, so you can have personal loans from people that for example, and also provide evidence where the person who loaned the money received that money, or you can also get a loan from the bank. Now, one thing to note is that there is a limitation for the loans. It should either be unsecured, which means, not secured by anything, or secured on your personal credit, for example, or it should be secured by, if it is secured, it should be secured by assets that are not related to the E2 business enterprise. So when a loan cannot work is if the loan is actually secured by the E2 business enterprise or secured by assets of the E2 business enterprise, that will not be considered as a valid source of funds for your E2 investment. So very important limitation to note when you are using loans. You need to clarify the security arrangement to make sure to clarify that aspect. The other requirement is that the business must be real and operating. This means either the business, the E2 enterprise, is already earning revenues or about to earn revenues and really be operational, ready to be operational as soon as you receive the E2 visa, which means everything that is necessary for the business to open its doors must already be obtained and, prepared before you obtain the E2 visa and enter the United States. So if you're, opening a gym, for example, you will need to already have the business space secured and, have already purchased all of the equipment that you need to operate the business, any employees that you need. If you hire them in advance, that could also be good for the application. Basically, the government wants to know that as soon as you have the E2 visa and you enter the United States, the business is pretty much ready to go to operate if you're applying with the startup. So everything that is necessary for the business to open its doors must be ready. Hiring U.S. workers. So marginality. Hiring U.S. workers is a very big part of qualifying for the E2 visa. That is part of the purposes of why the E2 visa is there in the first place, to, facilitate U.S. jobs. So if you are applying with a startup, you should be ready to prepare a business plan, submit a business plan, and explain the business plan that is expected to generate enough revenues and profits to be able to hire at least 3 to 4 full-time employees by year 5 of operations. So the government is really looking for a business that is more than just a one-person shop. The government wants to see an operating business that will actually hire additional U.S. workers in addition to, the CEO, the applicant who is coming in to develop and direct the business. The final aspect of an E2 application is that there must be a showing of an intent to return to one's home country if and when the E2 status is terminated. So usually that is satisfied with a signed statement by the applicant stating that intent. Different circumstances can lead to different risks. So definitely speak to an attorney. For example, if you have had a immigrant petition filed on your behalf, very soon before you apply for the E2 visa, things like that, that could, affect the non-immigrant intent risks. So that is definitely another thing to consider. All right. So more details about the rules and regulations for and the options for timing and obtaining an E-2 visa. So as I mentioned in the previous slide, there are two options that you can apply for the E-2 visa with. The first option is to start a new business in the United States, and the other option is to purchase an existing business in the United States. And as I mentioned in the previous slide, it is possible in that purchase context to use an escrow arrangement if you want to hedge against, the risks of potentially the E-2 visa being denied, as long as the condition of the escrow, as long as the sole condition of the escrow funds being released is the approval of the E-2 visa, it should be okay to use an escrow arrangement for this purchase. For how long is my E-2 visa valid? So that is a very good question and a common question. It depends on your country of nationality. And you can actually look that up by searching for reciprocity schedule, Department of State, and it'll have, a table where you can find how long the E-2 visa is issued for that particular country and that for that particular visa category. In many cases, in many cases for many countries, you would actually get as much as 5 years for the visa, which is pretty generous. Now, one thing to note though is that the validity period of the E-2 visa and the validity period, kind of the length of authorized stay that you get when you enter on the E-2 visa are two different things. So you can understand the visa to be kind of a ticket to come to the United States, right? And to gain entry to apply to, be admitted in E-2 status. And let's say, because in some countries, in some nationalities, the validity period of the visa itself can be quite short. So we do know of certain cases where the validity period of the E-2 visa is only 3 months. Now, if you have a validity period of 3 months under the visa, and if you, come to the United States and try to get admission in E-2 status during the validity period of the visa, when you are admitted in E-2 status, you will actually get 2 years for each entry to stay in the United States, work on your business, develop and direct the business before, you need to leave. So even though the validity period of the visa could be short, whenever you come in, you will get 2 years. That is the standard period of admission where you can, stay in the United States, develop and direct your business. And even if you have a 5-year length visa, every time you enter the United States on your E-2 visa, the standard period that you will get to stay and work in the United States is the same, 2 years. And if you have a visa that is still valid, that just means that you need to, travel outside the United States and then come back in. And, upon each entry, you will get a fresh 2 years period where you will be authorized to stay in E-2 status, stay in the United States, be directing and developing your business. So that is definitely something to note the difference between the validity of the visa itself and the length of your status. All right. So now let's talk a little bit about the investment and let's talk a little bit about the investment amount and how that is calculated. So the important thing to note is that there is no minimum dollar amount that is set in stone in regulations or the law. However, you must prove that the amount of money invested in your business is substantial. So how much really does it mean to have a substantial investment? The amount that will be counted as substantial will depend on the type of business, where you will apply, and the examiner who, is used to seeing that kind of case, and really the overall strength of the case. So let's discuss some examples. So let's say you are starting a consulting business, kind of an office type business where you don't need too much expensive equipment or things like that. It's really a service-based business. Maybe all you need is an office lease, some computer equipment, maybe an employee or two. So the startup costs that, the government will expect for that kind of business, service-based, may be lower than what, the government will think is substantial for a different type of business that typically requires a higher startup amount. So for example, a restaurant. right? If you're setting up a restaurant, you'll typically need to have much more expensive equipment to, have the enterprise be ready to operate, or a retail business where a high amount of inventory is usually expected, or a manufacturing type of business which will require much higher startup funds to typically get started. So really the important thing is to be able to show that your investment, the amount of your investment, is enough for that particular type of business to be operational. Another thing to note is where you apply. So certain consulates around the world have kind of a different practical standard on what amount of investment they're used to seeing and what they are likely to consider as a substantial investment. So in some consulates, for example, any investment less than $100,000 is going to not really meet you know, um, their understanding of substantial investment. So it is very important to work with a law firm, lawyers who know the nuances of how different consulates look at different um, investment amounts to, be fully informed of the risks that you're going in if you're applying with a lower investment amount. Now, let's talk a little bit about the proportionality test. And that is really relevant to startups in the startup context if you're establishing a new enterprise for the E-2 business. The proportionality test is basically that the smaller the total costs needed to start or purchase a business, the higher proportion of these costs must already have been spent. So, for example, let's say you're starting up a small consulting company that only requires around $80,000 to set up or purchase. The government would have expected you to spend 100% of that before you apply, everything that is needed for the business to be operational. By contrast, if you're applying with a 100 million manufacturing enterprise and you spent 10 million towards setting up that business, then even though the proportion of the investment is small because so much because of the high cost that is typically required for that kind of business, the government is likely to still think that your investment is substantial. And with regards to when you're buying a business, so the inquiry here is comparing the purchase price to the fair market value of the business. So if you bought the business in the open market, right, most likely the price that you actually paid is the fair market price, and that will, by definition, be considered a substantial investment because that's what's needed to purchase that kind of business. Now, the risk here is that when it is a related party transaction, or if you have, known of this opportunity through a closed market kind of arrangement, through an acquaintance or things like that, then since we don't have the open market um, to serve as the independent validation, it will be important to get some other types of validation. Let's say a letter from a independent CPA who can confirm that the actual price that you paid is equivalent to the fair market value of the business. So that's another way you can try to meet the substantiality requirement. Franchises. Franchises can be a good option for E2 visas, and because there's several reasons why. One of the things is that franchises have a lot of resources for franchisees, like, market goodwill, brand strength, and, some operational assistance and things like that. So that can help towards meeting the real and operating you know, um, requirement. Also, any fees that you pay towards the franchise fee or things like that, you can include in your list of expenditures that is related to setting up the business. So that can be a good way to bump up your dollar amount of the investment if that's what you're struggling with. Common good and bad E2 visa expenditures. So when you are starting up a company and when you are trying to, compile the list of expenditures that you've made related to setting up the company. Not all expenditures would be the best to classify as an E2 investment, right? So, for example, some common E2 visa expenditures that are good expenditures include things like, securing a business office space, buying equipment, spending on marketing or advertising, any licensing fees if you need it, any cost of setting up employee payroll, accounting services, things like that, that are typically associated with, business setup and, kind of preparatory steps for getting a business up and running. Now, by contrast, when we say risky expenditures, things like travel costs, or furniture that doesn't have a direct and apparent link to the business, though those can be risky, or things like a vehicle, if you're only using a vehicle for getting to and from the business, as opposed to having the vehicle, kind of be an essential part of what the business needs. So, for example, if you're a landscaping company and you have a truck, that makes a lot of business sense. But if you have a consulting company and you're buying a car to just go from your house to your office, that's not going to be seen as a great, connection to actual business needs. So definitely there are some areas where you want to be careful. Things like entertainment costs or meals or, things like that, could be risky costs to, really classify as E2 investment. But there are other more, more typical categories where you could use when you've legitimately used these for business setup purposes. All right. So the last, I believe that's the last, yeah, that's the last topic I will uh, review before handing it over to Michaela is, do I have to hire employees? And the answer to that is yes. And the reason why is because the E2 business, to qualify for, the E2 business requirements, must have the present and future capacity to generate enough income to provide more than a minimal living for the investor and their family. And so this means that either you already have U.S. workers in your business, or you are able to convince the government that the business will grow enough to be able to hire U.S. workers in the future, and by rule of thumb, the next 5 years of operations. And our rule of thumb is the business plan should be, convincing enough to, persuade the USCIS officer that your business will generate enough income in the next 5 years to be able to support 3 to 5 full-time employees. Now, we get this question a lot. What about W-2 employees versus 1099 independent contractor workers? And the recommendation that we have is W-2 employees are preferred and they are better. They are the better choice in terms of meeting the marginality requirement. In some circumstances, such as, if you work in an industry where it is the standard industry practice to hire a high number of 1099 workers as opposed to W-2 employees, such as construction or, restaurant business where you hire part-time, 1099 workers, that may work, but really it is dependent on the particular practices in your industry. So that is a little bit of a fact-specific matter, but as a general matter, W-2 employees are always preferred over 1099 workers, independent contractors. So how do you prove that either you have, employees or that you will have the expected number of employees associated with your business? So if you're applying for the E2 visa with a new business, the business plan is a very important element that will give the government more information about what is the profit and loss structure going to be for your business, and who you're going to hire as your employees, and when are you going to hire these employees, and how do these employees fit into your business. So all of this information can be persuasively presented in the business plan. Letters of intent. Letters of intent are more like if you have a brand new business and if you don't have revenues yet, right? Then how do you prove that your business will earn enough revenues to support hiring of these workers? If you have letters of intent from potential clients who are interested in hiring the company's services after you're granted the E2 visa, then that can help towards showing that even though the E2 entity is currently not earning revenues, it will, in fact, be very shortly earning revenues through these contracts that you would sign with those customers and clients once the E2 visa is approved. So that can definitely be helpful. If you're applying with an existing business, or if you're, applying for renewal of your E-2 visa with your existing business. Very important pieces of evidence are the W-2s of your business that shows how many employees were hired under the business, pay stubs for current employees, and tax returns showing the actual revenues that the business has earned in the past few years, and which also shows that there is sufficient profit generated. Generally, an upward trajectory is what we're aiming for. And for the W-2s, we want to ideally see that you have indeed hired 3 to 5 full-time employees at the point that you're applying for the renewal. All right, so then now I will turn it over to Michaela, and she will take us on the rest of the topics.
Thank you so much, GA, for all the helpful information. So let's discuss the business plan you will be submitting if you are applying, with a new business, and what should the business plan contain. So generally, we recommend that the business plan is about 20, 25, like 30 pages long, not too short, but not too long. So what sections should the business plan have? So the first section and really important one is going to be the executive summary. So generally, we recommend that this is the first page of the business plan. It's one page, and it has just kind of like a summary of the E-2 business. So it should describe, who you are. So this would be just a short description, like what's the name of the company, where is the company located, and who owns the company. The second section should be what do you do? So this should be just a brief description, of either the goods the company will be selling or the services the company will be providing, just a paragraph long. And the third section would be who do you sell to? And this would be, again, just a brief description of who are your kind of target clients or customers. The next important section is going to be market analysis and market research of your particular industry. Then the following section would be your marketing plan. This is going to be really important, and you should really kind of spend some time just kind of thinking, like what will be your marketing strategies, like will you focus more on kind of like, like online marketing, or will you be, like will it be mostly like networking, like mailing flyers, like TV ads and stuff like that. So that is going to be important. And the consulates and USCIS, they do look at kind of like the marketing plan, just to see, like if you kind of did spend time, like thinking about the efforts and, kind of like how to scale your business. The next really important portion is going to be the personal plan. So this is going to be basically a chart, like a 5-year chart that will describe how many employees you will hire in the next 5 years. And the chart should have, the job titles of the employees, their salaries, and then kind of specify, like how many employees are you going to be hiring in year 1, year 2, up until year 5. About the personal plan, you should also add kind of like job description for each role. It doesn't have to be like 1 page long, but it should be at least a paragraph. And then you should specify, like whether you are hiring the employees full-time, part-time. About the salaries, like sometimes people ask, like what should be the salaries of these different employees. So I would say like here, it should just kind of make sense, in terms of kind of the role and also the location, like where you will be hiring these employees. So like, for example, if you will be hiring a CFO and, the salary is $20,000 per year, the government, like at the interview, they may just kind of ask if that's kind of, like realistic salary for this type of position when it's going to be full time. So there is no, and of course, like the salary should meet like the minimum, like salary in your particular state. But it should just, the general response would be that it should just kind of make sense, in terms of like what the role will be and where the company or like where the employee is going to be located. And then a really important portion of the business plan is going to be kind of like the financial projections of your E2 company. So you should include 5 year of balance sheet projections, income statement, and cash flow statement. Here, in our experience, like sometimes at the interview, the consular officers like do ask, about the kind of like the estimated revenue the company plans to earn. So, before the interview, like you don't need to like memorize the exact numbers, but like you should be able to explain like all the financials, like if in year one, the projected revenue is going to be like $150,000, you should be able to kind of explain, like how you came up with that number. And that's usually in the business plan, that's usually supported by revenue assumptions. So like, for example, if you are planning to provide like 5 different services, like you should in the revenue assumptions, like it would have kind of this description, like how much revenue you plan to earn out of each of those services, and kind of like, again, like how you came up with those revenue numbers. Sometimes also like at the interview, the officers ask, like what will be kind of major expenses, of the business. So again, like this would be in the profit and loss statement. So before an interview, kind of definitely kind of spend some time and review all the financial projections. Perfect. So let's go over some E2 visa considerations. Should you apply with the USCIS, or should you apply at a consulate? So applying with the USCIS would only be an option if you are already in the US on some other non-immigrant status, and ESTA would not count. So like, let's say that you entered on ESTA. Unfortunately, there is no option to change status from ESTA to E2. But like, let's say that you entered on B1 and, like set up the company, made the investment, and then like later after you entered, you change your mind and now you want to change status to E2, that could be an option. Or, like let's say that you were studying in the US on F1 visa, and now, your OPT expired and you want to change status to E2, like that could be an option. So if you're in the US on any like non-immigrant status or in your grace period, changing status to E2 could be an option. If you're outside the US, applying, your only option would be to apply at your consulate in your home country. If you apply with the USCIS and if you change status with the USCIS, I would say the main advantage of that process is that it can be pretty fast if you pay for premium processing. So if you file the change of status petition and just file it under regular processing, it's going to take several months to get a decision. But there is an option to pay $2,000. Currently, the fee, it changes, but currently it's $2,805. And in that case, the government would make a decision on your case in 15 business days, so in about 3 weeks. So the process can be pretty fast. I would say that's probably the main advantage and the reason why many people just decide to do it that way. I would say like one disadvantage of kind of changing status is that it will allow you, like if USCIS approves the petition, it will allow you to stay in the US for a period of 2 years. But it only gives you status in the US. So you can stay in the US on the E2 investor status for a period of 2 years. But let's say that you leave the US, then you will need a visa to be able to come back, because you will not be able to enter the US with just the USCIS approval notice. You will have to apply for a visa at a consulate. So that's just something to keep in mind. And the application at a consulate, it's going to be kind of like a brand new application, and the consulate, like they will look at the USCIS approval, like you can mention it in the application, but the consulate will kind of make their own decision on the application. Now, if you apply at a consulate, the main advantage of that is that you will be issued a visa. And as GA mentioned, the period, like for how long the visa can be approved will depend on your country of nationality. But let's say, for example, that you are a national of Canada. nationals of Canada can get the E-2 visa approved for a period of 5 years. So then you would get the E-2 visa for 5 years, and you could be traveling in and out the US for 5 years, and before the 5-year period is up, then you would have to renew the visa. So it's just going to kind of depend, like I would say like both filing at the USCIS and filing at a consulate both have advantages, disadvantages. So that's definitely something kind of that would be good to discuss with an immigration attorney to kind of come up with a strategy. So now let's talk a little bit about source and trail of funds. This is something to keep in mind, like when you are considering a USCIS filing, is that USCIS is going to want to see like extremely detailed documentation about the source of the funds, like what is the source for the investment and the trail of the funds. So let's say that, for example, the E-2 investment funds are coming from your earnings from employment for the past year. So USCIS would want to see like all your, the payroll or the pay stubs for the past year. Then, the amount, like each month on the pay stub would have to match, like you would have to provide all of your bank statements, the amount would have to match. And then you would have to show that during the past year, you accumulated the investment fund on your account, and then show the entire trail of funds, like how you transferred the funds from your personal account to the company's account. So it's just kind of like much more detailed documentation than the consulates would generally want to see. If the investment funds are coming from your personal savings from employment, the consulates are generally fine just with tax returns, and then you would just have to show your tax return, and then the bank statement showing that that you transferred the money from your personal account onto the company's account. So you wouldn't have to show all that detailed documentation. So again, just something to keep in mind, like when deciding if you want to apply with USCIS or if you want to apply at a consulate. As GA mentioned, loans are fine for E-2. So the loan can be either like an institutional loan, or it can also be a loan from your friends, family, those are completely fine. The only type of loan that's kind of not permitted for the E-2 is a loan that is secured by the assets of the E-2 company. But let's say that the loan is unsecured, or if the loan is secured by your personal assets, those would be completely fine. Gifts, again, gifts are fine for E-2. It can be a gift from your family member, friend, those are fine. You would need to provide a gift letter, a signed gift letter from the person that is gifting you the money. And then you would have to explain and show documents, how the person who is gifting you the funds, like how they got the funds. So like, let's say that your grandmother is gifting you $200,000 and the money comes from the sale of a property your grandmother owned. In that case, you would have to submit a purchase sale agreement, for the property she sold, and then bank statements showing that she received the funds, and then bank statements showing that she transferred the funds to you. Let's talk about some considerations for small investment amounts. If you have a case where the investment amount is on the lower side, what are some things you can do to kind of strengthen your case? So you could submit letters of intent. So these would be letters from potential clients. These are not binding on the clients. They would just generally kind of describe that, the clients or, the potential clients, kind of, like once you come to the US, they plan to hire or engage your company for these types of services, or, and just kind of, like explain the amount they plan to pay to your company. The more of these you can provide, the better. If you can provide contracts with clients, those would be even stronger evidence than the letters of intent, because contracts would be binding. So if you are, if you would be able to provide those, that would be also helpful for your case. Another thing that, may be good to submit in some cases is a letter, like a CPA letter. And this would be really for cases where the investment amount is really low. And the CPA letter would be basically a letter from an independent CPA that would review all the company's expenditures. And then the CPA, would conclude that for this type of business you are starting, the investment is sufficient. So sometimes it is helpful, to provide that letter if the investment amount is really low. So is it possible to get E-2 visas for two investors? So here the answer is yes. The investors would have to own the business 50-50. And then the important things to keep in mind is that each investor would have to kind of independently meet all the E-2 criteria. So each investor, like independently, would have to make his or her own investment in the business. And we generally recommend that the investment amounts are the same or just kind of like very similar. So it would not be good if like one investor invests like 150,000 and the other one 60. They should really be kind of same or kind of like really approximate numbers. And then another thing to keep in mind is that each investor would have to meet the development direct requirement. And so it would be important to show that each investor would have kind of like a high level executive or managerial role in the business. Some types of cases, what we have done in the past is that, for example, one investor is the CEO, the other investor is like a CFO, chief financial officer, or a chief operating officer. So you would really have to show that each investor kind of has like different, duties, and then kind of like a high level managerial or executive role in the business. The investors can either be friends, or we have also done cases where the investors are related, like for example, father and son. But again, like you would have to show that each investor independently kind of like meets all the E-2 criteria. So what happens if there are substantive changes to business after filing? So the changes can be either, I would say, change in ownership or a kind of change in the activities, like the E-2 business is performing. So what happens if there is a change in ownership? So owned 100% in the E-2 company at the time you applied at the consulate, and now your ownership dropped to 50%, so that's fine. Some consulates, like in these types of cases, like when the change in ownership is kind of like high like this, it may be good to just kind of email the consulate and just kind of let them know and ask if they would want you to submit any documents to them. Some consulates, or what we have seen is that sometimes they just respond to kind of bring the change of ownership documents to the interview, like at the time you are renewing the visa. But if the change, if the change is like your ownership change 5%, it may not be necessary. But like if the ownership changes like from 100 to 50, it may just be good to send them email and ask, like if they want you to kind of submit the documents now or at the time you renew the visa. But you do always have to keep at least 50% ownership in the business. So that's really important to keep in mind. Your ownership can never drop below 50% because if it does, like you are no longer meeting the E-2 visa requirements. And the second type of change would be a change in kind of like the type, of the business activities. So like, let's say, for example, that you originally got the E-2 visa for like a restaurant business, and now, you want to start providing like, let's say like IT consulting services, like through the same company. In that case, because those two activities are, like completely unrelated, you would have to go back to the consulate or back to USCIS and get their approval before you start kind of providing these new services. If the services are kind of similar, the prior approval may not be necessary. So like, let's say, for example, that you've got the E-2 visa, originally for like a restaurant, and now you also want to start doing, I don't know, like a private chef services or catering, or do just like consulting in restaurant industry for other owners, that may be fine because it's still kind of like related to the original activity. And in that type of case, the prior approval may not be necessary. But I would say in this type of case, like when you want to start providing additional services that were not originally described in the original business plan, it always may be good to like reach out to an immigration attorney and just kind of discuss the situation before you start providing any new services, just to see if you have to file something with the government first. So what are some higher risk cases? So, real estate. So if you want to start an E-2 company that will kind of operate in the real estate industry, some of those businesses may be risky. What is not allowed, and we get this question quite often, like people ask, can I buy an apartment, or can I buy, like a house in the US, through like an LLC? And then, like I'll put it on Airbnb, like can that, kind of qualify as an E-2, can the purchase of the property qualify as an E-2 investment? And can I come to the US on the E-2 visa? So the answer would be, for that particular case, the answer would be no, because, as GA discussed, all the requirements, you have to show that there is a real and active operating enterprise and that will be employing employees. And in this type of case, the investment would be like a passive investment. So, like you wouldn't have any employees, then, there is like no real and operating business. You would just be like passively collecting, like rent or like Airbnb from people. So that would not work. Some type of, E-2s we have done in kind of real estate would be, like for example, real estate management companies. So like if you set up a company that is going to manage like multiple different properties, that could work for E-2. It is fine if some of the properties the company will manage, are your own. That's fine, but the plan should be to, to also manage other people's properties. So that would be one of them. Also, if you want to flip properties, that could work. But again, you would have to kind of do it on a large scale. It wouldn't really work, or, like the consulates don't really like if the company, like the plan is to do like one project per year, that would not really work. You really have to show that you'll be kind of like doing it actively on large scale. Also, real estate agencies or kind of brokerages, those could work for E-2. Equity trading companies. So here we have done E-2s for like private equity companies, but there I would say the key is to show that, the company will not only manage like your money and your families and friends' money, but really will kind of like get funds from kind of outside investors. And this would be kind of, described either in the business plan, or if you can get letters of intent for this type of case, like those would be extremely helpful. And then, as GA mentioned, like family business purchases are usually kind of considered to be risky. They are, possible, and, they can be approved, but like you would generally want to show that, or kind of submit a fair market evaluation to show that you kind of paid a fair market price for the business you purchased. So what are some common reasons for E-2 denials? So I would say like one of them, and kind of like really common one, would be low investment amount. This is also going to kind of depend on where you are applying, which consulate, if you are applying at a consulate versus USCIS. In our experience, sometimes like lower investment amounts that would not be approved at a consulate are sometimes approved with the USCIS. So, that may be also like another thing you may consider, like when deciding, do I apply with USCIS, do I apply at a consulate? But yeah, like, like let's say that you invested $15,000 and you apply the consulate, for consulates that's just generally considered to be like a really low investment amount, and the case just probably wouldn't be approved. Another common reason is just kind of like the nature of the business. So as we discussed, real estate companies, equity trading companies, those are generally considered to be kind of risky like industries for the E2s. Like it is possible, but generally just kind of riskier. Then filing location, venue. So as I said, like there are consulates that are like for example, like the US consulate in Japan, like that consulate is kind of used to seeing investments, like worth, like of kind of like a large multinational companies where the investment is like millions or several hundred thousands of dollars. And usually it's like the foreign company sets up a US company and makes the investment in the US, and then they just send like managerial and executive employees. And then when they see a case where, like it's kind of like a new business and the investment is under like $100,000, because they are used to seeing such kind of large investments, it may be very kind of risky to apply there, but then your case could be approved at another consulate. So the filing location really kind of matters. Another kind of risk factor is that let's say that you have been operating a business in your home country, let's say for 10 years, and you never, like you have been operating the business and doing everything by yourself. You never hired an employee, and now you're applying for an E-2 investor visa, and you are submitting a business plan and saying that you plan to hire, 5 employees in the 5 years. I would say that definitely, the officer at the interview could ask questions as to kind of like why, like how do you think that's kind of realistic? Like why didn't you hire employees in your home country, and why do you think you'll be able to hire employees in the US? So it's always something to keep in mind. If you do have a similar type of business in your home country, it's going to be important to kind of discuss with your attorney, kind of like how to overcome that. The next possible reason for E-2 denial may just be kind of like an issue with adjudicating officer. And the last one would be, like you just did not meet the requirements at the time of filing. So for example, let's say that you only own like 45% of the E-2 company, or, like then you would just not be meeting the E-2 visa requirements, because the requirement is that you own at least 50%. Perfect. And so let's just quickly go over how to renew your E-2 visa. So the most important thing is going to be hire US workers. This is going to be the most important. Usually you would want to show that in the past 5 years, you hired at least 3 to 5 full-time employees. And you would be submitting, the W-2s of the company for the past years, and then for the current calendar year, you would be submitting pay stubs or payroll. You would also have to submit kind of financial information about the company. So this would be the tax returns of the company. And then again, for the current calendar year, it would be the profit and loss statement and balance sheet. Generally, you would want to show that the revenue has been increasing every year. If there has been a decrease, that if there is a reason for that, like you would just have to explain at the interview. And then usually you would want to show that the company is profitable, but like let's say that there is a small loss, like 1 year, and again there is an explanation for that, that may be fine. If the company, like let's say has not been doing that well, like let's say the past 1 or 2 years, like kind of like how do you overcome that at the renewal stage? So again, like let's say that you like lost certain clients, you lost some important contracts, like you would just kind of like have to explain that in your renewal application. And in sometimes it may be helpful to kind of submit just kind of like a mini business plan explaining, like how you plan to obtain like new clients, and then kind of increase the revenue and hire additional employees. So, it's still possible like to get the E-2 visa renewed, but you would want to definitely kind of explain it in the renewal application. And then we discussed this already on the previous slide, like what happened if if there is an ownership change or if there is a change in kind of like the type of activities the E2 company does. And let's just run through the last slide. So let's go over some recent developments and adjudication trends and considerations. So E2 visas generally have high approval rates, and this has been the case even in the previous administration, like the E2 approval rates like generally stay around 80 to 90%. So that's pretty high. One kind of change that we may see, in the next 4 years is that the government may want to see higher investment amounts for E2 visas. So that may be kind of like a thing to keep in mind. We may also see that the government may start focusing more on kind of like hiring of U.S. citizens. And this is related to Buy American, Hire American executive order that was issued in the 2016 to 2020 administration. So we may kind of see again that the government will kind of start to focusing on this again. How the Buy American, Hire American kind of executive order relates to E2 and kind of like what we have seen in the 2016-20 administration is it's mostly for like cases where E2 employees are applying for E2 employee visas. So we did see that at the consular interviews, the interviewing officers would sometimes ask, like the employee, like why do you think it's necessary for you to come to the U.S. and why a U.S. worker would not be able to do this job. So especially in the E2 employee application, it's going to be important to kind of explain, like let's say that your company will be sending an employee and the employee worked for the foreign company, it's going to be kind of important to explain that in the application, why it is necessary and important that this employee comes to the U.S. and, like why a U.S. worker would not be able to do the job. We may also see that, the government will kind of start to focus more on employees rather than contractors, and they may kind of push more and more on hiring contractors. So as we said, we generally recommend that the company hires at least 3 to 5 employees by year 5 of operations, and those are W2 employees and not contractors. One thing that we may see more and more is administrative processing. So there is an executive order that was already issued in January 2025, and it kind of relates to enhanced security vetting. So like anyone applying for any type of visa is now has to go kind of like enhanced security vetting when applying for a visa. And the result of that is that more and more cases may be put in administrative processing. That means that after a visa interview, your case will go to what is called administrative processing. And, that will mean that your visa has not been approved and you are just kind of like waiting for the final decision. And, I would say that like in most cases, the cases get like resolved within like 1 to 2 months, but like some cases may be in the administrative processing for several months, and there is not really much you can do like other than to wait. And then we may also see like longer waits at consulates. And I think like we have even like started seeing that already. It just may take longer to kind of get interviews at consulates. And also, like once your passport, once the visa is approved, it may take longer for the actual visas to be issued. Like for example, like in the past, for example, the U.S. consulate in Toronto, like it took like 1 week to issue the visa, and now we have cases where it's just already taking longer and longer. So again, like something to keep in mind when you are planning, like your trip to the U.S. Perfect. Let's see.
All right.
We
Couple of
have any
questions. Yeah. We can just, yeah, go through these quickly. When starting a retail business, should the inventory be ordered or paid before the E2 visa is granted? Um, yeah, so th for that, I think it helps if you have purchased at least some inventory to, prove to the government that your retail business is basically ready to go. So if you have absolutely no inventory, then you may, the government may expect that you already have one, and not be convinced that your business is truly ready to operate if you just have none. But definitely a fact specific question. So get in touch with us if you'd like to discuss this in further detail. Michaela, do you want to take the next one?
Yeah, so is personal loan from a bank in home country acceptable for E2? Yeah, so absolutely. If the loan is secured by your personal assets, or let's say, for example, your property in your home country, that would be completely fine. You would just have to submit the loan agreement. If it's not in English, translation, and then evidence that you received the funds from the institution. But yeah, that's fine.
Yeah, I can take the next one. And also, if anyone else has questions, I do see some people raising their hands. Please just type your question and to the Q&A function or the chat, and we'll try to get to all questions. Can you renew change of status without exiting the United States? Do you must exit the company and renew? Oh, you are able to extend your E2 if you have an E2 status, and then you can go through USCIS to apply for extension of status. That is possible as long as you don't plan to travel in and out. When you do travel in and out of the United States, you do need a new visa to come back in. But if you're continuing to be in the United States and continuing to run your business, you can apply for an extension within um, the country through USCIS. Michaela, do you want to take the last one?
So can I work part-time on each visa? Yeah, so if you are the investor, it's fine if you work part-time. One thing to keep in mind is that, when you are coming here as an E2 investor, the primary purpose of your visit should be, like managing the E2 company. And the E2 visa also only allows you to work for that particular E2 company. But like, let's say that you work, or you're able to like manage the company in 20 hours per week, that's fine. And also, as an E2 investor, you can attend school in the US. So, that's if that's something you want to do, like that's fine as well.
Can we hire green card holders as employees instead of citizens? Yeah, that's usually fine. When we're, talking about employees, they have this one category, U.S. green card holders or citizens, so that should be okay. If you have an E2 visa, will my B1, B2 visa will expire? So not necessarily. So it is possible for you to have different visas in your passport. That's if they're still valid. But when you're coming in to the United States, you can only have one status at a time. So when you're coming in as an E2, investor, CEO, you need to show the E2 visa to your to this Customs and Border officer in order to be admitted in E2 status. Because if you're admitted on B1, B2 status, then you can't work while you're in the United States on your business. So it is very important to show the right visa, consistent with the purpose of your trip. Okay, I think that's pretty much it. And the process of renewing the E2 visa, I believe we went over this in great detail through our presentation. So I think that has been answered. So thank you everyone for your participation and for joining us today. Thank you, Michaela, for sharing your expertise. And yeah, I hope everyone has a good day and see you at the next webinar.